what your opinion is of the Federal Reserve and their actions taken recently. Do you feel they've done enough to boost the economy?
Yeah, well, I'm a fan of Alan Greenspan's over time. I've known him for a long, long time. We were on a board together at Cap Cities, and Alan is a very, very smart guy. He is motivated, in my opinion, entirely by what is good for the United States, the people of the United States. And so you couldn't have a better person in there. And the problem he may have is that because his tenure in office has been associated with this incredible bull market, that even though he wouldn't have claimed credit for it, that people might associate it because of the importance of the Fed generally. They might associate with him, so they may, if things don't work out so well, they may blame him as well. But I think his policy has generally been very good. You have to understand one thing about the Fed is that it's not as powerful as the mystique would make it. Its brake is better than its gas pedal. When the Fed wants to put on the brakes, we go through the windshield. I mean, the economy just, they can put on the brakes. Paul Volcker did it. He broke inflation by doing it. But I mean, when he put on the brakes in that period around 1980, I mean, people hated him. He was crucified for it, but it was the right thing to do. And he could do it. He did it all by himself. And and it was the only way because of the momentum that inflation was generating. It was the only thing it was what was needed then. Enormously unpopular. It's much harder for a Greenspan to put on the brakes because nobody wants him to put on the brakes, plus he's so visible. But he's put them on sort of gradually. But stepping on the gas pedal, he does not necessarily get the same result. It may help, but there are 1,000 other variables operating. And as you see in Japan, you can get down to zero interest rates and you can't stimulate anything. So it isn't like the Japanese haven't read the same books we've read about economics. I mean, they've read Keynes and they've read the whole thing. So we're not smarter than they are. We don't have any secrets they don't have, but they don't know how to get their economy going. And, their GDP there has been gone no place, in the last 5 years, and there's still problems around. So easy money doesn't solve everything, but Greenspan could very well get blamed for the fact that he hasn't solved everything, and it's just not in his power to solve it. He can help in various ways, but I don't think you could have anybody better, and I think he's done the right thing to this point, but the right thing may not be quite as effective as people may hope that it would be. In economics, you always want to ask, and then what? You'll read in the paper, well, what happens if the Japanese start selling our government bonds, or what happens if they dump the dollar? They can't dump the dollar. There's no way to dump dollars. You can, or at least dollar assets, because if the Japanese want to sell our government bonds, if they sell them to us, they get a time deposit or a demand deposit at Citi, or they still own a dollar asset. If they sell them to the French, they may get some assets from the French, but now the French have it. I mean, the only way you can reduce foreign investment in the United States is to change it around so they're consuming from us more than we're consuming from them. I mean, when we buy a television set from Japan, if we buy more television sets from them than they buy equivalent consumables from us, the exchange, what balances things is we give them some investment type asset, whether it's cash or a U.S. government bond or our stocks or our movie studios or our real estate or different things. And the only way that reverses is when we start running a trade surplus, which we're miles away from. So logically, if you read classic economics, you would believe that our currency would have been weaker over the recent years, and that it would be weak now. But there are other things operating, and that's one of the problems about economics is there's never just one variable. There's usually hundreds of variables, and they operate with different impact at different times. I mean, it's not like a physics formula. I mean, well, I guess it would be if you got into the Heisenberg principle or something like that. But the formula has a lot of the same variables year after year, but the relative importance of those variables and how they interact with each other is never exactly the same, and that's what we find out, the Japanese find out, everybody finds out. And foreign currency, or the value of our dollar and currency rates are defying what you would expect based on history. But as somebody said, if history were a perfect guide, the Forbes 400 would all be librarians. They just go and look it up in the books and they'd always know all the answers. But history doesn't repeat itself, as Mark Twain said. History doesn't repeat itself, but it rhymes. I mean, things come back, but they don't quite come back in the same form. And we'll understand all this perfectly in a few more years, why the dollar's behaved the way it has. But I think it would be useful net for the U.S. if the dollar were less strong.